Hello, I'm Liz Lumley of Finextra, and we're here at Sibos in Boston, and we've put together a special panel for you looking at real-time payments, which is a big topic in payments right at the moment. So this sort of journey for real-time payments globally has caused a certain amount of change in a lot of banks' internal organizations. So I'm kind of going to take advantage of the fact I have two banks here. I've got Bank of America and Société Générale. So I'm going to be a bit cheeky, and I want to know what's going on inside your organization. So I'm going to start with you. What has been the pace of change dealing with real-time payments at Bank of America? What were some of the lessons learned and some of the best practices that you found?
So for us at Bank of America, being a US-based bank, faster low-value payments hasn't really hit us yet in our home market. However, being a global bank that serves clients in markets around the world, we've had to address it in many markets. So I think about the UK and faster payments. I think about India and interbank mobile payment service. I think about G3 in Singapore and the emerging payment system in Australia. Our challenge has largely been transitioning from how do we deal with the differences and interoperability challenges between those markets and resetting our infrastructure. So we've embarked on a very long, multi-year process to transition from an integrated banking service outside the US to much more of a global payments hub, so that we can take our clients' files, either a US client or an APAC client or a European-based client, and transform that information to fit into the payment formats of the local clearing systems and match the speed and data formats that are required, and then link into those markets globally. And so we provide sort of a linkage interoperability overlay, if you will, between those markets. And that journey is ongoing as we kind of transition. We started in the UK with EMEA, obviously getting ready for SEPA and faster payments. We're bringing Singapore on live, being compliant with the Singaporean government now. And then we're kind of moving through our 35 branches around the world to sort of bring those into the payments hub architecture. And it's an ongoing journey that's quite challenging.
Okay, so we're going to go across the pond now into Europe. So I'm really interested to know about SocGen's journey with real-time payments.
Well, coming out of a major transformation, which is SEPA actually for Europe, it was important for us to discuss with the customers and see what will happen for them right after they've embarked on SEPA. It's obvious that the contingency of a good cash management comes back to when, where, and how. And as we look through those three items, real time is obviously answering to the questions of when the information's, when the transactions is being performed. So there is a tremendous interest within our corporates dealing with us to embark onto the real-time strategy. Having said that, it's important to define real time. I always say there's two real times. There's a real time of the transactions and there's a real time of the information we pass on to the company that we have. If you look at today, most of the time real-time information is still not yet there. Reason being, when you put information back to the customers, it's us bringing information to the customer. Real-time information is a completely different process where the customers will come within our systems and look at what the information is available right now for him. So you see, it's a tremendous change in the way we compute information, in the way we transfer information to the customers. That's the first part. We're not yet there where all the banks will be able or capable of providing that sort of information. So we're embarking on that just to make sure that they have that information available whenever it hits our screens within the bank. The second part of real time is real-time transactions. Now, real-time transactions also face a lot of hurdles simply because regulations lately has forced us to look very carefully at what we're doing with our customers. Compliance, for example. You can't really do real-time for the only reason that, first of all, you got to check on the transactions, whether it's a valid transactions, whether it's complying with all and every regulations we have to face today. So if you look at those two aspects, you really see that there is a big interest for the corporates to go onto real-time. At the same time, it's facing very large challenges for us to put that sort of response right away in front of them. There are limitations. We know the limitations and the reasons. What else can we do to just get as quickly as possible both the transactions and the information available to them? We're now looking at a lot of times here, just to give you an information, most of the real-time information, it's the difference between half an hour and pretty much right on time. That half an hour seems very little, but in the same times when you got a major corporates dealing with a lot of subsidiaries, a lot of branches, a lot of fund flows going all over the place, it's important that within half an hour, especially at the end of the day, he knows exactly his treasury position so he can better manage his position. So you see, it's a combination of time, it's combinations of transactions, but it does face a lot of hurdles. What we know, that's the way to go.
Great. So we're going to go over to the UK now, the birthplace of faster payments. And you've now heard, two banks' journeys. We had a conversation before this video where we talked a little bit about, it's really about simplifying the back end for payments. And, shouldn't like a big bang approach be the best approach, or what do you think? Should it be more of a piecemeal setup to have that sort of simplified back end? I want to know your views on that.
Well, I think that to be able to do it in a big bang would be very, very risky. I mean, especially when you look at the infrastructure inside of most of the banks, it's actually very siloed. We talked about the light switch type of question, that it goes on and on and on. But actually, to get to that point where you could do it, you really need to be able to isolate the individual pieces parts. And actually, even when you do that, you have a reasonable amount of risk to try and aggregate all of those payment systems all across all of the countries and all of the currencies that you're dealing with. And then you get into the question of, well, actually, am I going to get into real-time settlement as well? And I believe that we should go down that route. But trying to do everything in one go, I think the messaging first, and the switching first, and then the settlement after it has to be pretty darn close. I'll give you the example of something that we see in the UK is, what is your actual position if you have a long weekend? How much do you have to hold and hope that those 3-4 days actually you have coverage for? So I think there are a lot of questions and a lot of silos that need to be simplified, and slowly but surely they need to be rapid and taken out as we move forward. That's, I think, the big issue we see.
Excellent. I want to thank the three of you. Thank you very much.
Thank you. Thank you.